Good afternoon, everyone. I am going to refilm the introduction to footprint charts here. A lot of people had issues. I guess my computer was lagging with my software running, so I tweaked a few things, and hopefully this fixes it. So this is a footprint chart. What is a footprint chart? It is, well, it kind of gives you the footprint of what is going on in the market. More specifically, what do these numbers mean that are overlaid on these candlesticks? These are, well, first we're looking at the E-mini, which is the futures of the S&P 500. So these are not shares, these are contracts. These numbers are contracts that are done on the bid and the ask. So if you look, we'll talk about this candle right here. And if you look on the left side, these are contracts that are being sold on the bid, or sold. And on the right of the candle are contracts being bought. Now, footprint contracts, or footprint charts rather, are very, very customizable. If you're familiar with them, or even if you look up on Google Images or other traders who use footprint charts, they're very, very customizable. Almost everyone has it customized to how they prefer. So when I'm talking about footprint charts, I'm talking specifically about mine and how I have mine configured. So let's follow on looking at this same candlestick. And we see this node, this volume node, is what we call it. Each one of these, you see gray, gray, green, gray again. These are volume nodes. And it's similar to volume by price. If you're familiar with traditional volume, how you'll have along the bottom, volume by price is usually on the side of your chart. And the more volume that is done, let's say at this level at 366, the bar will, or a volume node, will build out the more volume that's done there. And that's the same thing done here. So the more volume that's done here on this candle at 3,982, the more volume done here, the more this volume node will build out. And it just makes it easier to get an eye of how much volume is being done. And that's why I don't use volume on the bottom of my charts, because you could see through the footprint, obviously through the numbers, the actual volume being done where and obviously when. So moving on, what does this green volume node mean? Green volume node means that there's a buying imbalance. How do we know there's a buying imbalance? Well, I have my personal footprint charts customized so that we read this diagonal. So this is a buying imbalance of 1,037 contracts bought over 222. So, you know, pretty much 5 times multiple there. A little bit less, of course, but let's call it 5. 5 times multiple, that's a big buying imbalance. You have 5 times as many contracts being bought at this level than were sold at this level. Buying imbalance. I know by reaction you want to look side by side, but that's just how it's done, at least for me. So don't look side by side, look diagonal. And if we're going to go in the opposite direction of selling imbalance, as we could see one right here, you have 1,040 contracts sold under 409. And to touch on, to not look side by side and look diagonal, you could say, but look up here, there was 409 contracts bought when there's only 204 sold right here. How come this didn't continue up? Well, that's why we look diagonal. So yeah, so moving forward, how can you use footprint charts to benefit? So let's kind of break this chart up a little bit. We can see that there's tons of buying imbalances in this area. And let's kind of just put a little support line. So we could see that buyers are trying to hold this, trying to hold it, and we have a selling balances over here. And we continue this resistance line. So you could see that as we came into this resistance, let me kind of zoom the footprint in a little bit so we could better see. Let's try this out. 1 second. Yes, that is much cleaner. All right. So we know that sellers are active here. Why? Because we have selling imbalances. And every time we come up, we come back down, and buyers were buying over here, still buying at this level, but you could see now that they are moving up. So we're kind of constricting, we're getting tighter, and if you look on a traditional candlestick chart, this is a wedge, right? Buyers are moving up, sellers are trying to move down. You could see at this point right here, sellers are trying to move down, we are wedging. And you could see as we're coming up, buyers are moving up. We had sellers active right here, and you could see right here, all their stops were ran until they're active at this big resistance. And then what happens here? Look at all the numbers done on the contracts over here. We have at the most 900, 700, but really it's 5, 4, 600 contracts done until someone, some algo, market maker, whatever, it does not matter. Definitely marketed in lots of shares, and look how much volume is done in this single candle. Look at the range in this candle. So what can we take from this? This popped up, and we have this thin volume node all the way on top. So only 15 contracts were sold here at 41 bought. What does this tell us? Well, that's exhaustion. We moved up so quickly, and we're doing these crazy numbers on the footprint, and then look, from 971 to 15, or even 1200 to 15. That's exhaustion. There's nobody else that the market maker can force to sell out of their short position. And look what happens after. We close this candle, and you may say, well, we have a buying imbalance. Well, you got to buy to cover, right? So we got blown past resistance, and now you could look for a short, because price is only going to reverse once everybody who wants it to go in their direction is stopped out. That's just how the market works. You got to take liquidity to move. So let's fix this a little bit. Of course, what happens now? We open the next candle and see how we have 1,100 contracts done at this level here. We open up the next candle and we get what's called a zero print. That signifies and confirms the exhaustion that we saw in the past candle. Zero print is very telling. And to touch on this again, 1,100 contracts done at this level on either side, and we move on here, and only 100. So we had a zero print and then 100. There is no one who's willing to buy this up. This is just pure selling. We have 2 layers of selling imbalance, and sure enough, we move down. Now, you could also see that this cloud of moving averages, we've been just respecting, and this is the overnight session, so volume tends to be lighter and less erratic moves until a stop run happens, of course. So buyers come in here thinking, oh, that's all right, we ran these stops, but we're going to continue up. We've been respecting this for hours now. And this is a 30-minute chart, by the way, if you did not see up here. So we had a zero print, buyers trying to buy this moving average to continue up. But important with our footprint, you have to look at the context. Look at how many shares were done up here that were now stopped out. And we have a buying imbalance, sure, it's a huge buying imbalance of 638 contracts bought over 5. But in the context of things, much more were sold here. So this buying imbalance could just be a covering rally of smart traders who were selling the top. So we don't really look at the zero print as in, okay, selling's done, time to go up. Anyway, too, you did have 1,900 contracts bought here, whether that was short covering or people just trying to buy the moving average as well. When this candle closed, we closed under them, meaning that all these people right here that were buying, when this candle closes, they're in the negative in their position. So, moving on to the next candle. Let me get this out of the way. Oh. Onto the next candle. Little pop right above these sellers. Maybe people were low slamming, think, okay, nice, we ran stops, we're going to sell short. And rather than selling over here in the top, they low slammed. Pop their positions, exhaustion, run those low slamming shorts out, and then we continue down. Something else to note. So we can see through the footprint, buyers are active at this level here. And look what happened here. They tried to buy this in that area right there. You see the buying imbalance, you see some exhaustion, 86, 45. low numbers compared to what's done above, so there is a temporary exhaustion. But you have to think, once we run stops on the downside, where's the next liquidity area? Down over here. So people just trying to buy resistance, or support rather, I'm sorry. Their stops are going to get ran, basically, and that's exactly what we have here. This candle opens, and you most likely, this was a quick drop, run everyone out. Actually, most likely, I wasn't paying attention to this. I was not awake for this overnight session, but this probably opened, most likely, as it usually does, and is just bouncing between these volume nodes, collecting a lot of volume. People trying to buy under this resistance, and then probably one quick sweep down, we get a zero print. Next candle opens, and look, we have this buying imbalance continuing, and sure enough, we get another nice close. Look at where both of these candles close, and look below. Most of the volume is under where we closed, so this is a lot of trapped volume. These are people like short sellers who think, okay, stops are ran for all the people over here, and now we're just smooth sailing down. So they're either adding to the positions or starting short positions down low, and you get punished for it. Next candle opens, and we have a buying imbalance. So it's things like this where you could read the footprint and get an idea of what is going on. And this is how this transpired until today's open, which we are live trading right now. And this is just rinse repeat. This is all it is. So going into this morning, I will go over, I'll post a video later of my daily plan and what I was looking at. But I gave a buy zone. I was looking here. Why here? I'll go over in greater detail in today's recap, but essentially looking at the footprint, looking at TPO charts, and the order flow, I could see that this is an area where buyers are active, and if buyers want price to continue up, they need to defend their positions here. So this, we have market open right here, and we dip down, and we get this nice accumulation of shares. So at this time, try to block out the top of this candle. At this point, all the volume was here, no volume was done above. And what this looked like was a lowercase b, the distribution of volume, if we look at this volume by price with all these volume nodes. And that usually signifies accumulation. Of course, you have to use context, and in this context, it was in an area where we're interested to buy. So we can trust that this is accumulation. And sure enough, look how crazy the volume is, 11,000, 9,000, 7, 7, and then all the way down here, 165. What is that? Of course, exhaustion. And that's where we get this crazy move up into this 30-minute cloud. And you had a lot of sellers trying to short this, thinking, okay, we lost the 9 EMA, lost the cloud, now we're trending down. So a lot of people are selling this, and right before this 30-minute candle closes, we pop all their stops, selling a balance right there. That's just all these shorts, lots of volume done there. All of them were stopped out. Next candle opens. And now think about this. If you're someone who's trying to short this moving average and your stop just got ran, think about this as a retail trader, a lot of traders, what's going to happen? You see this wick, once we open, we start moving down. We start moving down to the same area they were shorting. They're like, oh, I got to stop out, but this is still going down. Look at it's going down. And they resell, they resell their contracts. They're going short again. They are trusting their levels. We come down, and guess what? We got a zero print, double buying imbalance. A little difficult to see that green, but it is a buying imbalance, and we continue up. So at this point, we are almost 60 points around from our buy zone. It was a really good day. So yeah, I hope that explains everything, or at least a better idea of what footprint is and how you could use it to your benefit. Now, during market open like this, I'll probably have, one second. I'll have something like this. It's a little bit easier to read, less numbers. And you could see candle closes, majority of volume underwater. This is just short sellers thinking the market's not going up, and they're just getting ran over again and again and again. And you could see even here on this 30-minute candle, we closed with selling imbalance to the top side, and then this candle opens and it's just straight rip up. How do we know it's a straight rip up? Look how thin this volume is. This is just people, these are shorts getting smoked right out of the water. And just one last thing, these numbers right here, what is this? This is called the delta. And again, there's different ways people look at different deltas, whether it be buying and selling volume or, you know, there's just a whole bunch of different things. I'm just going to talk about how I have my volume, or my delta rather, set up. So how is it set up? If we look at the bottom of this candle, we have the 3,993 contracts bought over 1,033, buying in balance, of course. There is 2,960 contracts difference between these two, the delta. So if price comes back down here into this first volume node, it's going to start chipping away at this delta. It's going to become 2,800, 27, eventually 2,000, and below 2,000. Now, if we're looking to go long here for whatever reason, we're going to want to see price pull back up into this second volume node area. And what do we want to see? Well, say this delta got ran down to maybe 1,000, but we know that before it came down here it was at 2,900. When it comes back up here, we're going to want to see buyers add to their positions. And how do we know they are adding to their positions? We're going to see this go from 1,000, 1,500, 2,000, 2,500, eventually get back to 2,900 and above. Maybe we get to 3,000, 3,500. That is buyers adding to the position and working their way up. And we can see in real time here, the delta buyers are chipping away. We have a selling imbalance over here. And as we move up and down, we watch this delta and see who's adding to their positions, how the distribution is working out, and all that. So if you are interested in what I teach with Footprint, you guys can find me on StockTwits. I do live market commentary during the open sessions. I will link it in the description, but here's my account. I give daily plans as well before market open, and kind of go in as much depth as possible. So that is the footprint charts, how I have them set up rather. Hope you guys all have a great day.